Are you wondering why some investors are able to earn big, fat, juicy dividends and others are really struggling? Many investors do invest in an area called midstream. Now, this is in the energy sector. It's a very particular type of investment. And many of these investments have what they call a K1. That means that rather than being a stockholder, you are treated as a partner in ownership of that company. Comes with a whole bunch of horribly complicated tax for. There are, however, a few midstream companies that have a regular tax treatment as a corporation. Now, today I'm going to go through two of these. One of them is Enbridge, the other is Hess Midstream. Now, in both cases, we get the benefit from oil and gas transportation, stable revenues, as well as some fat, juicy dividends northwards of 7%. So, my friends, let's get into it today. I want to have a look at Enbridge. Now, this is listed on two major exchanges, both in Canada, the home country, as well as on the New York Stock Exchange, providing greater international access to the stock. Now, importantly, on the NYSE, this is denominated in American dollars, and of course, there are exchange rates between the home currency in Canadian dollars and American dollars. So, in the Canadian currency, we'll often see unbroken continued dividend increases, while here in the American currency, it might fluctuate from time to time. However, here we are. Now, as we can see from this as well, there's a nice, steady, slow growth there. We can see some very nice dividend yields due to the recent price declines, and we can also get a sense over time for some of those dividend raises. So let's get into now. We have here the adjusted operating earnings. We can see a very healthy dividend yield here of about 7.92%. We can see it's BBB plus rated by S&P, which is nice to see. We can see it's a very large corporation here at $73 billion. Now, scrolling down, the analyst scorecard is certainly not as strong as you've probably heard me say I like to see. However, in this particular case, because of the overall stability here, I'm going to give them a bit of a pass on this as well. I want to look at the performance here. I'm going to click on reinvesting dividends. And we can see through here as well, dividend growth rate has generally been fairly good, with the exception here of the financial year 2022. Now, again, this is in US dollars. We can look at the Canadian dollars soon after this. But generally, we can see fairly strong dividend growth rates. Now, importantly here as well, when we begin to look at the compound growth rate in comparison to the S&P 500, we can see quite nice compound growth rates with the dividends reinvested. Now, I can, of course, switch over to Enbridge and the Canadian ticker, and we should see these dividends increasing year on, year out. And indeed, that's what we see. So in the 2022 financial year, there was a small increase in the Canadian dollars in terms of the dividends, but that, because of the exchange rate fluctuations, translated into a dip in US dollars. So we can see this beautiful increase here, although in recent years it's been single digits and low single digits since the pandemic, in fact. But we can see in past years as well some periods of very strong dividend growth into the double digits. Now, back to the US dollars. As we begin to look at the forecasting calculators, in a very simple sense here, I'm going to look at the end of the 2025 financial year, and we're looking at a total annualized rate of return of about 15%. Now, that is partly due to the dividend yield and partly due to the increase here in the earnings expected in 2025, although the earnings here in 2024 are expected to be relatively soft. Now, this is assuming that we maintain the normal price to earnings ratio of about 17.7, where we're expecting prices to begin to increase and these earnings here estimated to be relatively stable. Now, the other thing to see as well here is we can see the analysts' expectations earnings have weakened somewhat over the last 6 months, and that's something to take into account and monitor a little bit as well. Now, in terms of Enbridge, though, I have opened a small position here in my family portfolio, partly for improved diversification, and also looking at the very healthy dividend yield that we can see there as well. For another option, Hess Midstream. Now, this is a very powerful grower as well. However, there are a couple of points to be aware of if you're looking to make an investment in Hess Midstream today. So I think the first thing to do is to look at the February 2024 investor relations presentation. Now, it's important to note as well that Hess Midstream is owned by Hess, which has just been acquired or in the process of being acquired by Chevron. And so that's come into some of the issues here. Now, what we can see from this investor presentation here is the long-term contracts are with Hess. So Hess Midstream has the long-term contracts with Hess. Now, these should be honoured and taken over by Chevron. It is. There's very strong cash flow stability here that they are reporting, and of course, very strong shareholder returns here. And they're looking at least 5% annual distributable per share growth as well, which is very powerful as well. And this is what I think we also like to see. So they've got some strong growth in volumes here, strong growth in EBITDA, a stable CapEx, so they're not massively spending on CapEx, as well as the adjusted free cash flow also increasing strongly every year. Particularly here in the slide green, the free cash flow after distributions as well. We can see that the DPS is growing, and that's growing quite consistently at say 5%, so that's giving us some assurance of long-term gain. And as well as this, it's not just about the distributions, but they've also got this share repurchase option as well. Now, debt is something that I've talked about quite a lot over the last year on the channel, and this is also where I think Hess Midstream has a very strong potential advantage here. And as they point out, they've got very low debt to adjusted EBITDA, and this is very much lower than most of their peers. It's in line with about half the peers and substantially lower than these peers that they list here. Now, what that means is it means that they're going to be in a very good position. Interest rates stay higher for longer. Now, the adjusted EBITDA has been growing at about 20% compounded annual growth rate, and we're going to see in a few minutes as well the power of what this looks like in terms of the charts and the overall growth of the company. So the first thing to note here is late in 2023, Chevron agreed to buy Hess Corporation for $53 billion on an all-stock deal. Now, what that means is they have bought essentially the wider energy platform that Hess Midstream is inherently connected and tied to. Now, my estimate is that Chevron has past performance in terms of doing this and then also acquiring the subsidiary or the downstream such as Hess Midstream as well. So my pick is after Chevron has completed the Hess Corporation deal, they will probably also look then at acquiring Hess Midstream and rolling it into the single portfolio. As we begin to look at Hess Midstream, we can see Hess Midstream long-term history here, and also steady growth to accelerate with a very powerful acceleration increase here and shift away from the minimum volume contracts. Now, there's a couple of reasons as well. Now, part of it's also going to be explained Chevron's acquisition or acquired or is in the process of acquiring where Chevron's going to be the wider company able to make better use of the Hess Midstream network. Now, whether or not that happens, Chevron's actually going to own about 40%, I think, of Hess unknown at this point. If this is going to happen, I would expect that after the Hess acquisition remain in place. Now, what this means is that Chevron's going to be we'll be seeing somewhere here near the end of the Hess Midstream and portfolio that they're going to roll up Hess Midstream. And that's going to be now, Chevron does have form. They have here previously purchased Snowball and also the Noble Midstream shortly after. So I suspect this could be something couple that they this as well with the if that happens, I would buybacks on Hess Midstream that we looked roughly at 40 to maybe 45 US dollars per share as an offer price to current investors. Now, Hess Midstream is not acquired by Chevron to acquire Hess Midstream. And as I've said, I think this is highly probable. I mean, Chevron has done such a thing in the past. They acquired Noble and Noble Midstream a little bit later. So this is quite a strong and I think this tidies up a lot of the capital structure. And we can see this is driven by 20%. If they are going to do this, I would expect growth in 2024 and 2025, adding on announcement very nice, powerful 7.5%. And again, it will take a little bit of time along with dividends also increasing at a steady rate. And I think if that happened, I would anticipate that we'd be looking at about a $40. What do you think? Hit me up in the comments down below. Share or Hess Midstream a better fit? So I think there could be some capital gains here along with some dividend yields within longevity that Enbridge provides. Personally, even though I've got a starter position in Enbridge, I may also be adding a small position in our portfolio for Hess Midstream. looking for some capital
So
appreciation.
what do
here
you think?
with those earnings growth
Is
over the
this
next
a
several years,
potential
or an
buy
acquisition
for you
by Chevron?
if